Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look ahead to Apple's earnings, which are projected to come out on January 27th. We're going to take a look at some of the broad and alternative data sources to get a feel of what analysts are projecting for Apple here in their Q1 earnings, and do we think that they'll hit that number? I think this year in particular, the FANG stocks, as well as some of the other big tech stocks, how they fare in their earnings is going to make a big difference on the way that the market flows for the first 3 months of the year. If we see some of the big companies like Microsoft, Apple, Amazon, those kind of places miss over their holiday targets, then you're going to have some downward sentiment, I think, in the market heading into March. However, if they blow them away, a lot like they did last year during the pandemic time, then this kind of euphoria that's going on could very well continue for an elongated period of time. Reminder, as always, that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before taking on any investments. And if you like stock market analysis like this and other personal finance videos, then make sure you like this video and subscribe to the channel so that you can stay on top of all the great content I have planned. All right, let's take a look at where Apple stands today. This is on January 14th. You got a price of about $130. We see the 1-year chart over here, and Apple's had a great run. Their sales have been boosted with the sort of work-at-home phenomenon. But the big thing that's coming up, of course, is how did Q4 go? How did iPhone sales go? And that's what we're going to dig into. The P/E ratio today is at 39.61, and we're going to see here in a second that that's running pretty high for Apple, which is very much like the rest of the market. You have an EPS over the trailing 12 months of 328. And of course, you get a little bonus with Apple these days of a 0.63% dividend on today's price. Okay, so before we get into what analysts are expecting for Apple, let's just kind of put some context behind that $130 price. You can see back in June of 19, you had a P ratio of 1658, very comparable in terms of the forward PE as well. But as this market has broken out and Apple has had very good sales on the same token, you can see how this has went up pretty considerably to this point where you're at now in the 39 range. You know, that's more than double basically what you saw last June as far as how much are you paying for Apple's earnings. So typically in a scenario like this, at least on the trailing PE, the expectation would be that folks are paying more for the trailing earnings because they believe that the forward earnings are going to be much higher. But when we look at the forward PE, you know, that's not really going down a whole lot. Your forward PE is still double that period over here in June, certainly above what you saw last September and last December before, you know, things really changed in the world. So it's an interesting story right now with Apple. I can understand with the 5G cycle and the new phones why people are excited, but it is going to be hard to live up to these lofty expectations, at least in terms of what you've paid for Apple earnings in the past. Now, there is the X factor, right, which is in the world of the pandemic and lower interest rates, high stock market demand. You're always going to get priced out a little bit higher. So this is definitely an area for high prices, but it's one to watch on the Apple side just because the valuations are trading much higher than normal. All right, so let's take a look at what analysts are expecting. And let's start with the current quarter. So we have 30 analysts that Yahoo is tracking. You have an average estimate for EPS of $1.40. Last year at this time, they reported $1.25 for their Q1, which is most people's Q4, but it's just a difference in the way Apple does their fiscal calendar. So you basically have analysts typing in a little bit more than 10% gain over the year before. Now, for some companies, 10% wouldn't be that big of a deal. But if you go down on a revenue terms and you're expecting Apple to bring home, over $100 billion, well, then that 10% is certainly not chump change. And if we scroll down a little bit, we can see the revisions that have been made over the last few days. Let me find that here. Okay, so current quarter. 90 days ago, the estimate was at $1.36. Then it went up to $1.39. And here just recently, another penny was added to bring it at $1.40. This is a slightly bullish sign because it insinuates that analysts like what they've seen in the quarter. If this was 60 some odd days ago, this probably came after the Black Friday data, that they added a few more cents to it. So you get the feeling that analysts are coming in with evolving expectations. And it's interesting too, while we're down here, because the current year EPS expectations have also went up throughout the year. So 90 days ago, you were at 387. Now you're at an even 4. That is a 13-cent difference. So bottom line, the whole fiscal year for Apple expectations have been going up over the past 90 days. All right, so now let's try to find some news that would support the concept that, Apple has made more sales this year than they might have made last year. And so I've got a couple news clippings here that we'll review. Then all of them seem to suggest that iPhone sales and PC sales are very, very strong. So this little news snippet from Seeking Alpha, Apple sells 18 million iPhone 12 units in China. This is huge for Apple because China has been one of their countries that has actually lagged a little bit in sales. And you see the bullet points. Apple sold 18 million iPhone 12 units, exceeding expectations and achieving over 20% market share, DigiTimes reports. Impressive Q4 sales dented the market share numbers for Huawei, Xiaomi, Oppo, and Vivo, which accounted for more than 90% of China's smartphone market before the iPhone series launch. In Q4, their combined share fell to 78%. This is a huge win in China for Apple to go basically from 10% market share, potentially up into the 20s. You have to give them credit for that because China has been a declining market, and it sounds like they made some very strong penetration. All right, so that all sounds like good news, but one of the things that stood out on the original article was the fact that their shipment volumes for Q1 2021 are on par with the number of units shipped the previous quarter. So it doesn't necessarily mean that there was growth quarter over quarter, but it does sound like that there was a pretty significant market penetration as well as growth year over year. Next, we have a report from a website named Flurry. Flurry Analytics uses 1 million mobile applications, providing insights from 2 billion mobile devices per month. Let's check out some numbers. And the first thing that stands out is right here, lagging holiday smartphone activations. This year's holiday season has come with extraordinary challenges. Obviously, you can't go to the stores, la-di-da. Due to this year's unusual circumstances and based on slower than normal November activations, we had forecasted that this holiday season would face decreased demand. With this in mind, let's compare Christmas Day this year to last year. So this graph is just a one-year look, and it's minus 23%. Now, this is all smartphones. This is not Apple. And this is just for America, so a little bit different, but minus 23% obviously would dampen expectations for Apple. But when we scroll down, we see that Apple dominates the top 10. And what this means is the top 10 of new device activations. Now, I'll just read it off since it's hard to read. This gray line is a 7-day moving average of activations, but you had iPhone 11 plus 5%, XR at 0, 12 Pro Max plus 14, regular 12 plus 23, 11 Pro Max minus 6, SE plus 34%, and that'll be interesting. That's actually one that I bought my daughter. It has a really attractive price point, particularly for a teenager. So iPhone SE showing some strong gifting demand, if you will. 12 Pro plus 8%, and the rest. But what's great about this is there was only one other phone, and that was the LG K30 that was even listed on the top 10 activations, which is super surprising if you ask me. Okay, now let's turn our attention to the PC market, which in the past has sort of been a declining thing, but in this work from home era, and 2020 in general, we've seen PC sales up dramatically. And I'm going to go down, this is a chart about TSMC, but it relates to Apple because all these things here, nearly 25% of TSMC's foundry revenues have been provided by Apple for iPhones, iPads, Macs, Apple TV, and Watch products. So this isn't the main reason that I'm on here, but it is a good call out. If you are a big Apple shareholder and you have a huge bull case for them, you might as well buy TSMC as well because they're pretty much hand in hand. But what I wanted to show you here, which I thought was a cool chart. All right, this one shows Apple revenues as a percentage of TSMC revenues. And the reason I wanted to show you this blue line here is the percentage of Apple's revenues in terms of TSMC's total production. And you see the red line here, how it grew year over year. And then, of course, into 2021, it is expected to grow even more. So there's two things at play here. Number one, of course, is that Apple's making their own chips for some of the devices that were being sold. And in my opinion, I would take it as a healthy sign that the 2020 percentage of revenue was increasing, as well as the fact that orders for next year were increasing as well. So I'll take this as a bullish signal for the Q4 activity. All right, and finally on the PC side, we have this from 9 to 5 Mac. Mac shipments rise industry leading 49% in Q4. Apple boosts market share to 8%. And this guy has a graph that's basically top 5 companies worldwide, PC shipments, market share year over year. Lenovo led the way at 23,000 shipments. Apple's down here. They had 7,300 shipments, and that is compared to 5,000 or so shipments last year. And they grew their market share from 6.8% to 8%. All in all, that leads to a 49% increase in shipments year over year. All right, lastly, taking a look at the TipRanks dashboard to see what the best performing analysts think about Apple right now. We always sort by the top 4 and 5 star analysts, and we are always checking the date to make sure that our analysts' opinions are fresh. There is my affiliate link for TipRanks is in the description if you're interested in signing up and learning more about the platform. But from an Apple standpoint, we have a mixed bag. So if we just cut off at 10 days ago, you have 1, 2, 3, 4 buys, 3 holds, 1 sell. Certainly nowhere near a consensus in terms of us being able to read between the tea leaves, because these are all, top-ranked folks. But we've got all of our data points now, and I'm going to share with you my thoughts on where Apple will land. All right, so let's just reiterate what we saw. We know that analysts are projecting an EPS gain somewhere in the neighborhood of $1.36 to $1.40. We know that China iPhone sales were good, particularly the Model 12, and they gained market share on that platform. And right off the bat, where my mind goes is just having the units being up year over year and understanding what that likely means in Apple's world of connected services, right? I'm guessing it probably lends itself well to the Air headphones. It probably works out pretty good for the services division and the cloud backups and all those things. So keep in mind that just straight phone sales doesn't tell us the whole story. Every phone that's activated ultimately probably buys something else from Apple as well. On the PC side of things, I just can't imagine it's anything less than extraordinary from a year-over-year perspective. So ultimately, from my eyes, we've got, call it flat and phone sales, actual units sold, because if the United States was down a little bit on activations, but China was up on Apple activations, we'll call that sort of flat across the board. Then we have PC sales that are almost assuredly up, and we can rest assured, knowing what we've seen out of Apple, that services, headphones, wearables, things like that likely all did pretty well because that's been growing units. So in my mind, Apple does beat the quarter from an EPS standpoint. That should be good news for the stock, but the only thing I worry about in today's world of hefty valuations is what they say about 2021. Don't forget that this is a company, like so many others, that has kind of backed off our earnings guidance for months ahead during the pandemic. But now all of a sudden, the expectation is for companies to start putting numbers on the board for 2021. And Apple's 2021, at least from an analyst point of view, looks to have higher expectations than the year before. So we'll see how that plays out. On the bright side of the higher expectations, keep in mind that we're comping a year that basically missed a quarter of Earth, right? Because everybody was locked in. So it's important not to overanalyze the higher expectations because you're coming off of a year where you missed a significant chunk of time. All right, guys, so after some, alternative research, I'm under the conclusion that I think Apple can hit the earnings per share, and as long as they come out with a strong 2021 forecast, then I think the stock's okay right now, even though it's trading at a hefty valuation. You figure Investor Day this year, which is late February, you're probably going to get a sneak peek of the car and how this whole world's going to connect to each other. So I see some decent things with Apple. Just know that if you wanted to start a new position or buy some shares today, you could make the argument that they're expensive. If you're an established stockholder and you're just riding the train, well, I think that you will have a good earnings report to build off of, but maybe wait for a market correction to add any more to your position. All right, guys, hope you enjoyed this video. Let me know what you think in the comments. We'll see you on the next video.